So as expected, yesterday's session was also a dull session as far as all the three major indices are concerned. Dow Jones down by 232 points, S&P 500 down by 12 points, and Nasdaq was flat. Now, if you remember, or those who have watched my yesterday's video, I have specifically said that Dow Jones is very near to its support. But if you want to go for a long trade, you must keep a very strict stop loss on the downside. And simultaneously, for Nasdaq, I have said that resistance is there, and S&P is somewhere in the middle of the range. And if you looked at all the three indices and their individual performance yesterday, they actually behaved somewhat, in a similar fashion. Now, for today's session, although the big trend for Dow Jones is in between 32,590 on the downside and 34,435, 440 on the upside, but there are two things. Over a period of time, the trend or this range that we can see for the last 2.5 months or 3 months, the highlighted section, it's getting weaker day by day. So that's one thing you need to understand. Okay, and this is very important. Now, as far as today's trading session is concerned, let me zoom this chart and let me show it to you. So this is what one can expect. So if I may zoom this chart, what I can see are two specific levels to look at. So because Dow Jones is trading in between 32,577 on the downside and 32,827 on the upside, it is now trading at somewhere in the middle of the range. So let Dow Jones come close towards 32,577 if you want to go long, and if you want to go short, wait for Dow Jones to test 32,827. This is the narrow range. A breakout beyond 32,827 or more will push Dow Jones higher. Else, if Dow Jones closes below 32,577 or less, then it will be a breakdown. So rather, don't play this narrow range. Let's wait for a breakout or breakdown, then take your decisions accordingly as far as Dow Jones is concerned. Okay, I think this is very clear. Talking about Nasdaq is the devil. Nasdaq is definitely a devil over here because it is very simple. Okay, although the big range is 11,570 on the upside and 10,200 on the downside, and if Nasdaq continues to close below 11,515, 517, obviously the trend is on the downside. Okay, I don't want to, because it all depend upon the market when it opens and how will it behave. That something will be decided by the market participant. But for today's trading session, if Nasdaq continues to trade below 11,517, the red line will be the support. This red line is nothing but the 200-day moving average, simple moving average. So this is going to be your support. Okay, so focus on this, and it is a breakdown we can clearly see, or a downside move is most probably expected as far as Nasdaq is concerned. So that is very much clear as far as the trend. Now talking about S&P 500, if I am saying Nasdaq will go down, you can apply the same as far as S&P 500 is concerned. And for S&P 500, although it's trading in between 4,000 on the upside and 3,768 on the downside, but what you can do over here is, for today's trading session, keep your stop loss at 4,032 if you want to go short, and if S&P 500 continues to trade below 4,032, obviously the trend will be on the downside. And simultaneously for upside, we have our immediate resistance of 4,032 and 4,099. But if you want to take a long trade, let me tell you, it is a very risky one, because if market does not behave the way you think, then obviously you will be in a deep trouble. So let's be very clear about the price move, and don't make any unnecessary decisions. So in a nutshell, we can say that market is very tricky, and all the major indices are indicating weaker trend, most specifically on the downside. So this is the end of the video. Thanks for watching.